Hi, it's Neil here with another weekly video insight. Following our last video on home ownership as an investment, we received a few questions around capital gains tax. So I wanted to take a moment today to explain a bit more about capital gains tax, or CGT as we call it. Firstly, your principal home where you live is generally exempt from capital gains. But if you're looking to invest in property or have a portfolio of shares, then these will be subject to CGT. So how does CGT work? Let's look at this example, right? Let's say you bought an investment property back in 2013 for around about 600,000, and today you've sold it for 900,000. So the capital gain will be the difference between the original purchase price and the price at which it's sold. And that capital gain is only realised once it is actually sold. So in this case it would be 300,000 capital gain. You must declare this capital gain in your annual tax return, where it is essentially added to your taxable income and taxed at your marginal tax rate. Now, capital gains tax, or CGT, is sometimes referred to as the happy tax, and there are good reasons for this. Firstly, you only ever pay it on a capital gain on an investment, which means the value of your investment has gone up, which is a good thing. Secondly, you're generally eligible for a discount provided you've held the asset for more than 12 months. Now, if the asset is held outside of super, that discount will be 50%. If it's inside super, it's 1/3. Going back to the previous example where the capital gain was 300,000, you've held that asset for 5 years, which is more than 12 months obviously, and therefore that reduces right down to 150k, assuming it is held outside of super. What's more, if that property is owned in joint names, so say between you and a partner, that capital gain gets split between the owners. So you'd get 50% each. So that 150 gets split again, and you would have 75,000 capital gain each, which is added to your taxable income. So I hope that explains a bit of the basics on capital gains and your capital gains liability. Of course, there are exceptions to the rules and special circumstances, for example when you're inheriting an asset. So it can be quite complex, and we highly recommend you seek personal and taxation advice whenever you go through a capital gains tax event. If you would like to know more, please don't hesitate to contact us. We're always here to help, and happy to see how we can help you. Have a good week, and I'll see you in the next video.